planning is doing in the previous year, you say to yourself, it's 2023. In 2024, I would like to have this kind of a tax outcome. Do you want more refunds? Do you want to owe money? Do you want to break even? You can plan into that. We're in 2022 right now, so obviously you'll be planning for 2023. But you can do tax planning for 2023, 2024, 2025. You can do it X amount of years in advance. That's why it's really important to know the kind of tax outcome you want to achieve and to really sit down with your tax planner on how to achieve that outcome and how it can work for you as an individual and for your business. That's all I got. Bye for now. Hi, I'm Fun here with one quick tax tip on how to think of your taxes better and how to plan into the tax outcome. All right, so it's the end of the day, and I want to tell you all a little secret. So come close. Do you ever see people on their social media accounts taking you on a tour of their office? Everything has their logo on it, or they're wearing something that's really cute with their logo, or they're just showing you around their beautiful house and they see all the nice cars, all the nice fixtures in the house. There's a reason why this is being done. So depending on the business, you see somebody with their logo on something, they master the subtle art of advertising and marketing. They're marketing their business for you. Now, depending on what your business is, it can be necessary to give you that panoramic view of the house. That way you can sit there and say, hey, yeah, that person obviously is good at what they do. I want to hire them to help me buy houses like that. So depending on what it is, right? Depending on what it is, that's why you often see people giving you this sweeping view. You're like, I don't care to see all this stuff. Well, they don't care that you don't care, but they know that for them, as it relates to their business, these could be deductions because they're in the pursuit of profit, right? They've met all the 9 criteria that the IRS has spoken about, and these type of expenses are ordinary and necessary to their business. So that's the little secret y'all have to know. So it's not by accident that you happen to see all these beautiful views of people's Instagram profiles, on people's Instagram accounts, TikTok, what have you. It is the subtle art of business expense deductions. All right, that's all I got for you. Bye for now. So this is some good news. If you're a cryptocurrency investor, I'm going to tell you how you can get rid of your cryptocurrency without recognizing income gain or a loss. It is called donations to charity. I'm going to explain to you why. So if you were to have your cryptocurrency and you were to sell it, you might get taxed at long-term capital gains or short-term capital gains if you had a gain. You take that money, you now give it to a charity, and you get a charitable deduction. Now, if you took that same cryptocurrency, let's just say it's significantly appreciated, and you donate it, guess what? Even though you've gotten rid of the cryptocurrency, because normally when you get rid of cryptocurrency, when it changes hands, you have created a taxable event. But if you donate it to charity, that is not the case. That is not a taxable event. You, my friend, get to recognize the fair market value of that cryptocurrency as a deduction. So you're not getting skimped out as if you were to sell your cryptocurrency and then pay tax and then donate cash. You get the fair market value of that cryptocurrency. It's a win for the charity. It's a win for your pocketbooks. So if you want to get rid of your cryptocurrency that is highly appreciated, you may be a little bit scared of the taxes, we're going to encourage you to go ahead and donate it to charities that are close to your heart or charities that you feel would benefit from having that cryptocurrency. Okay? That's all I got for you. Bye for now. Let's go over one advantage of being a business owner, and you can see the numbers, how they're going to work out. All right, so I'm going to show you numerically how this looks like. You have somebody who gets a W-2 at the end of every year and somebody who is a business owner. Now, they both make the same amount of money and they both have deductions. The W-2 owner, they have no house, they have no charitable contributions, no student loan deductions, so you're going to get the standard deduction of $13,850. The business owner, because they have a lot of expenses during the year, they have rent, they have electricity, they have travel, minimal travel, and they have car expenses and so on and so forth. Their deductions totals $20,700, as you see it over here. Now, what that does is it brings down the taxable income of the business owner to about $39,300 and the W-2 paycheck person to $46,150. So essentially what's happening is the difference between the two is $6,850. So this person has $6,850 more in income than the business owner. And this is a numerical representation of the difference between having a W-2 and owning a business. I'm going to show you how one day can make a difference on you paying less taxes on your cryptocurrency transaction. So the best way to do this is look at the numbers. So here's how you can use your social media account to minimize your taxes. If you're a content creator, you're going to want to listen up. So this is going to be one good tax tip. Now, the way we have to think about this is when you look at your social media account, you look at your business, you have to ask yourself, how do I intend to make money? Because you're in a business, that means you're in the pursuit of profit and you want expenses that are ordinarily necessary. So how do you intend to make money? Do you intend to make money by just getting a paycheck from Meta or 1099 from Meta? Do you intend to make money by subscriptions? Do you intend to make money by people buying your product? Do you intend to make money by people buying your courses? Do you intend to make money from coaching? How do you intend to make money? Because how you intend to make money will determine what expenses are ordinary and necessary. Because if all you do is sell coaching courses, then you may not have the same expenses as somebody is going to be actually buying their physical products. So ordering their books or ordering their food, your expenses might be slightly different. Everybody's situation is different. So it's not a one glove answer. It's not a one size fits all answer. It's very different, but you got to start thinking about how you're going to make money. That way you can start playing by the rules that were given in the tax code, which is profitability, show those 9 factors for profitability, and taking those expenses that are ordinary and necessary to your business. Okay? So I hope that helps. If you have any questions, just go and let me know. Drop your comments in the bottom or just send me a DM. It's the end of the night. All right. I hope that. Here's how you can legally avoid paying payroll taxes. You have a sole proprietorship or you have an LLC. Fantastic. You have a child that you pay wages to and you list them as outside labor on your books as another expense. Great. That's all it takes. I hope that was helpful. Follow for more tips. Bye for now. Here's how you can legally avoid paying payroll taxes. You have a sole proprietorship or you have an LLC. Fantastic. You have a child that you pay wages to and you list them as outside labor on your books as another expense. Great. That's all it takes. I hope that was helpful. Follow for more tips. Bye for now. Here's how you can legally avoid paying payroll taxes. You have a sole proprietorship or you have an LLC. Fantastic. You have a child that you pay wages to and you list them as outside labor on your books as another expense. Great. That's all it takes. I hope that was helpful. Follow for more tips. Bye for now. Here's how you can legally avoid paying payroll taxes. You have a sole proprietorship or you have an LLC. Fantastic. You have a child that you pay wages to and you list them as outside labor on your books as another expense. Great. That's all it takes. I hope that was helpful. Follow for more tips. Bye for now. If you recently became a U.S. citizen and you have a company overseas, you're going to want to listen up because the IRS requires a U.S. person, which is now you, who has 10% or more interest in a company overseas to report that interest on a Form 5471. Now, the penalty for not reporting this can be $10,000 or more. So it's really important that if this is your category, you reach out to your tax preparer and talk to them to see if you are actually required to file the form. All right? Hope that was helpful. Follow for more tips. Bye for now. Here are 5 common expenses that you may be missing out on if you have now turned a part of your home into your home office. Number 1, property-related expenses. This includes mortgage interest, rent payments, insurance premiums, property taxes, and utilities payments. And of course, utilities includes phone, gas, electric, so on and so forth. Number 2, office furniture and decor. So this includes the expensive painting on your wall, anything that you use to decorate your office, but just make sure that those items stay in your office. Number 3, physical repairs and improvements that you made to your home office. Did you paint the walls? Did you redo the floors? These are all examples of deductible expenses. Number 4, business phone line. And number 5, other home expenses such as snow plowing, a roof repair. These are all expenses that are deductible. Now, the number 5, that's deductible according to the percentage of your home that you use as a home office. But this is something that your tax preparer can definitely calculate for you. So just make sure you submit all your information to your tax preparer. That way they can get you going for tax season. I hope that was helpful. Follow for more tips. Bye for now. Here are 5 common expenses that you may be missing out on. Here are 3 things you may have done that may delay your refund this year. Number 1, easy one, wrong social. Know your social security number offhand. If you don't know it offhand, take out the blue card that you're given from the Social Security Administration and confirm it before you submit your return. Number 2, you were feeling really adventurous, so you moved around 6 times in 2 years. Identity theft flag, and it's going to take the government time to figure out that you are actually a person that did indeed move around 6 times in 2 years. And number 3, you owed the IRS money and you did not settle that before you filed your return. Make sure if you have outstanding debt with the IRS, go ahead and settle that because you better believe they will. Here are 3 smart and easy ways you can hire your children to work for you. Number 1, office work. Number 2, social media work. And number 3, advertisement. Office work, having them go to the post office, having them refill their printer and their paper. Anything related to office work you can have them do. Make sure they're actually doing the work. Number 2, social media. Updating your social media accounts, helping you make social media posts, filming for you while you're doing your reels and your updates on your social media. Anything social media related, which I'm sure they'll love, go ahead and have them do that for you. And number 3, advertising. So if you want to go and put flyers in people's mailboxes, if you want to take a drive around with them and take flyers to different businesses, you can go ahead and do that. 3 simple ways to have your children work for you. You get a tax write-off. They get money tax-free so long as you pay them underneath the standard deduction. I hope that was helpful. Follow for more. If you're a U.S. citizen or a resident and you consider yourself a digital nomad, you're going to want to listen up because I'm going to give you one tax tip that's going to keep you out of a $100,000 pot of trouble. So as a digital nomad, you like to go to different countries and work from different countries, and there's nothing wrong with that. You also may have a bank account in that foreign country when there's nothing wrong with that either. Now, if you meet these following requirements, you're going to be required to file what is called FinCEN Form 114. Some people refer to it as an FBAR. Number 1, you're a U.S. person, so citizens and residents. You have a foreign bank account, and it had over $10,000 at any point during the calendar year. And you either have ownership of that account or you have signatory control. There are certain exceptions to that, but this is just general. So if that is you, make sure you go ahead and file your FinCEN Form 114. It is due with your tax return on April 15th. This year in 2023 is going to be April 18th, but it's due with your tax return You have to file it.